Friends, welcome to yet another video in our series Finance and Investing Tidbits. The title of this video is rather interesting. One stock, so divergent analyst views, what should retail investors do? Welcome to this interesting video. Often retail investors rely on analyst views to buy shares as they don't have sufficient time to do research themselves. They invest in a large number of stocks based on those recommendations or various columns that they read or YouTube videos and so on. As a result, they accumulate a large number of stocks and each they allocate very small amount because they're not very sure how this stock is likely to do. Now here is something I came across as very interesting data. Here is some data which was published on a reputed portal devoted to business and market news discussing the target price given by different reputed brokerage houses for a very large finance company. Let's have a look at what appeared as news. Now here you find that two very reputed brokerage houses, Morgan Stanley and Bernstein, have given the price target of 8,000 per share and 9,440 per share, perhaps with a 1 year horizon. They have not specifically mentioned 1 year as a horizon, but looks like typically as they often talk about, it's a 1 year horizon. So from the current level, which was about 5,600, 5,700, these two very reputed brokerage houses talked about their own target as 8,000 and 9,440 respectively. Now here is something more interesting. Again, I'm talking about Bernstein and CLSA. Bernstein we have already discussed. CLSA on the other hand has kept a sell rating on the stock. Bernstein, as it talks about, it has given an outperform rating with a target of 9,440, and here CLSA has cut the target to 5,000. Now, who are we to judge which one is right or wrong? They have absolutely, it is within their right and the right of their analysts to take a view, and whatever professionally they think is right, they have talked about it, right? So 8,000, 9,440, 5,000, these are the three different target prices that three reputed brokerages have given. Now remember, all these are extremely well paid, respected analysts. They have excellent qualification. They have access to almost the same data, and yet we can clearly see the divergence in views is very remarkable. 5,000 and 9,440, it's almost half of the other target. So the issue is not, we're not talking about making any judgment about those three analysts or those three brokerage houses. They of course have a reason for their view, and we respect that, right? The issue is from the perspective of we as retail investors. So valuation is not easy, and hence retail investors like us who have limited time are best advised to concentrate on a few stocks where you can form your own view. You don't have to go by the view of various analysts, because as you can see from the data, the analysts have given very divergent views, and therefore personally I have very limited number of stocks and I follow a holding company and investment company route because my valuation then shifts from valuing a company to finding out the discount to the NAV, and that's much easier because that NAV is based on the market price, which is objectively known, whereas valuation is very subjective. So by following a limited number of stocks, or following the holding company investment company route that I have talked about in my channel, or by focusing simply on markets and investing in index funds, retail investors can find a way to manage this divergence in information. That is the very purpose why I have created this video. So again, to repeat, I have no disrespect for any analyst views or any of those brokerage houses, but all that I want to point out is the divergence can be so high that we as retail investors could be very vulnerable. So looking at some of the targets given by some of the brokerage houses, some retail investors could be very excited about that stock and money can flow into that stock. Whereas some other people can get very depressed and get into selling their stock, considering that there may be some issue with the company. So the point I'm making is that if we just get swayed by the information which is appearing on the portals or the analyst views, there is a risk that we could make some serious mistakes. And therefore, we have to, as retail investors, focus on very limited number of stocks and invest through a very defensive approach, which is the holding company and investment company route, or simply follow the index investing route through index funds. Thank you.